The US government is now officially a shareholder in Intel, announcing on August 22nd that it will take a 10% stake in the chipmaker worth about $9 billion. Now that's unusual for Washington, which normally backs companies with grants or tax credits, not stock ownership. Now the deal essentially swaps out CHIPS Act grants that hadn't yet been paid and converts it into equity, giving the US Treasury an actual stake in Intel rather than just handing over cash. Intel shares jumped about 5.5% on the news. The company had its best trading week in 25 years leading up to the announcement of this deal, but has essentially been in a downtrend for the last 4 years and is not the leader it once was. The move is significant because Intel is the last leading chipmaker in the US that makes its own semiconductors. But the bigger question here is, will the US government influence Intel's strategy and encourage other companies to work with the struggling chipmaker? All right, to break this all down, I'm joined by Liza Tobin, former China director at the National Security Council during the Trump and Biden administrations. Thanks so much for joining.
Thanks so much for having me on your show, Claire.
Of course. So, what does it actually mean for Intel and for taxpayers now that the US government owns nearly 10% of the company?
Yeah, thank you for that. This is an unusual move by the US government, but it's not unprecedented. Back in 2009, the US government did take equity stakes in the three big automakers. This was during the global financial crisis. And so those companies were on the brink of bankruptcy. And so the government kind of took extraordinary means to step in and prevent them from going under. That's because they assessed that these companies were just so important to American jobs and to the manufacturing sector writ large that they just couldn't allow them to fail. And so in that case, that extraordinary move worked and the company survived. The Intel situation is similar but different, I guess I would say. It's different in at least one respect. The company isn't in absolute crisis. It's not about to go under tomorrow, but it's not doing great. And that's actually a problem for the entire country. I guess I would call it more of a slow burning emergency that could take years to play out. So I guess just to zoom out a little bit, the US is, as many people in your audience no doubt are familiar, we're almost entirely reliant on Taiwan for advanced semiconductors, for where these semiconductors are actually made. If we lost access to those semiconductors, it would have disastrous implications for the entire economy. It would just shut down a number of industries that use these chips. And Intel is basically the only American solution to that problem. There are other foreign firms that make these chips, but Intel is unique in that they're the only American company that both designs the chips and manufactures them. So it seems like the government is assessing that it would be a national crisis if Intel actually went under. So I think that's why they're stepping in. Um, my question is really if this is the right type of government intervention, if taking an equity stake makes sense. There's other ways to do government intervention in an economic emergency. And I think one way that could work better in this case is for the government to ensure a long-term reliable source of demand for the offtake, for the purchase of these chips. So I'm not sure if they considered that as a different option.
Mm-hmm. And you mentioned Taiwan. When you look at this deal, what does it say about America's competitiveness in semiconductors compared with Taiwan, but also South Korea and China?
Yeah, that's a great question, Claire. And I think you have to look at different layers of the semiconductor supply chain as a whole. And I would say, just to sum it up, the US does really well in certain parts of the supply chain and not so well in other parts. So the US is still in the lead in the design of these high end chips. And everyone's familiar with NVIDIA, this American company that designs the best chip in the world. However, the manufacturing is where the country falls short, and most of that has been offshored over the last several decades, really, to Taiwan and elsewhere in East Asia. And again, that could be a problem if we lost access to Taiwan and access to the chips. We know that the authorities in the People's Republic of China have made it clear that they believe that Taiwan is part of China, and they haven't ruled out taking action by force at some point to force Taiwan to be annexed with the mainland. If that happened, I think there's a chance that the supply of chips could be disrupted, and that would really have global implications for the entire world economy.
And this is the first time CHIPS Act grants have been converted into stock. What are the broader implications of tying government support to ownership? And could we see more of these kinds of deals in the future?
Yeah, the US government, the Trump administration has signaled that it might be doing more similar deals like this. We actually saw a similar move recently where the government took a stake in MP Minerals. This is an American company that produces rare earths, and that, of course, is another sector that's been in the news recently. It's an essential ingredient in all kinds of industries. But China has a chokehold on the production, the processing of these rare earths. So again, I think the government has assessed that there's this slow burning potential economic emergency in the making, and they are taking extraordinary action. We really need an insurance policy. I wouldn't be surprised if they pursue similar equity deals in other critical sectors where China has a chokehold. So shipbuilding comes to mind, maybe advanced pharmaceutical ingredients, APIs, maybe more in the rare earths category.
There are big national security concerns around chip supply chains and exports to China. Do you see this move as a way to reduce those risks?
So again, I do think that there are overarching national interests and national security concerns at play, and government intervention in the economy may be what's required. I mean, China's as we've seen. The way that China competes in the global economy is not kind of in the normal way we expect from a market-driven democratic economy. Um, the Chinese government puts, huge support and subsidies and all the rest behind their firms. So our firms really are not competing on a level playing field. So even though it's less than ideal, I think we'd all prefer to be competing on a level playing field. I think that's the American way. We don't mind competing. We don't mind losing if the competition is fair, but I think it's simply unrealistic to expect China and its state owned enterprises and national champions to suddenly start behaving like normal market driven actors when they just don't have a track record of doing so. But in terms of how we respond, again, I think I keep coming back to government intervention in the economy is sometimes required. There's sometimes when there's just no substitute for the government as an actor, but really we want to do it in the smartest way possible. And that, that might not be equity stakes in all cases.
And we know that normally CHIPS Act money is tied to milestones for US manufacturing. In this case, those guardrails were removed. Does that weaken accountability at all?
Yeah, I think you raise a good point, Claire, in that, um, again, the way the government should be thinking about this is it's all about national security. Where you get into trouble is sometimes where different policy objectives get muddled together. With the Biden administration, you saw the temptation to pile on a whole lot of policy objectives beyond national security. So in their case, it was social policy, the daycares and things like that. The Trump administration, though, you see something different. Seems like they're piling on the objective of revenue generation, and that's where I think when your objectives get muddled, you start to get into trouble, and it's unclear what the objective function is. Are we trying to set up an insurance policy for the sake of our national security so we don't find ourselves um, suddenly without access to the advanced chips? That should be the goal. And again, where it gets muddled is when you're kind of mixing these functions. I guess I would just remind folks the government is the government. They're not a business. It's the role of a business to make revenue, to make money. That's the American way. That's how things work. The government is not a business, and the government's role is to think more long term, to look out for Americans. How do we protect Americans from foreign threats? Um, when is extraordinary intervention required? And things get a little murky, and we start to have problems when those two are not distinguished.
And we'll see in the coming weeks and months if other companies follow this playbook as well. Liza, thanks so much for taking the time.
Thanks, Claire.
This could be the first of many government for equity deals in US tech. And for Intel, it means fresh capital and political backing. It also puts the spotlight on whether the company can close the gap with leaders like NVIDIA, Taiwan Semiconductor, and Samsung. And now the bigger question is whether this experiment will help bring advanced chip making back to US soil or leave America still chasing the competition. For Investors Business Daily, I'm Claire O'Connor.